Hey, Jacqueline Crider here, PBJ Mortgage, making mortgage simple as making a peanut butter and jelly sandwich. And I get asked all the time, rent versus own, which one's cheaper? Why should I consider buying versus renting? So there's obviously a lot that goes into the whole whether I rent versus buy conversation. And I'm not gonna necessarily get into the specifics of those things. I'll save that for another video. But one of the things I am gonna talk a little bit about is which one is cheaper and why. And the reality is if you know anything about me, you know that the answer truly is it depends. Why is the answer it depends? Well, because of the fact that I don't know how much you pay in rent and I don't know how much you would be planning on making in a mortgage payment. But let me talk to you about some of the things that people don't consider when they look at the rent versus buy scenario that might get your brain thinking about ways that you could save money with one versus the other. So, important things to notate. When you go ahead and you get to purchase a property, you are going to hopefully write some items off. Now, why do I say hopefully? First of all, I'm not a tax professional. That is not something that I do for a living. And so how you write things off is up to your tax professional. But usually, if you are not doing a standard deduction, you are doing an itemized deduction, there are things that you're going to get to write off that you don't get to write off as a renter. For instance, you get to typically write off mortgage insurance. You typically get to write off property taxes, right? Any kind of, I believe there's some like repair stuff that potentially you can look to write off, some stuff like that, right? So all of these are things that you actually can look to potentially write off, which is going to reduce down the amount of money you pay the IRS at the end of the year, which none of us like to pay the IRS, let's be real. And so that can actually save you some money. Now, on the flip side, something to consider is that when it comes to renting, it's your landlord's responsibility if something breaks. If you're the homeowner, it's your responsibility. So sometimes that situation can cost you a little bit more money because it is your responsibility. There are some ways that you can actually get that cost down a little bit. You can buy what's called a home warranty, and that usually will cover a lot of major systems in your house. You can even have it cover most of your appliances. And so that's sort of like an insurance policy, if you will, for things that potentially break. Some people love warranty companies, some people don't love them. I'm pro warranty because personally on my own home, I've actually had a warranty company on most of them, and they've actually helped pay for quite a bit of stuff. Now, it is a little bit more difficult because you have to go through a process, etc. But hey, one of those things, right? Another thing that you need to factor into the equation is the fact that when you're renting, that money is basically doing nothing for you. And what I mean by nothing for you is poof, into thin air, right? You might as well set your money on fire. The only thing you got in return is the fact that you get to live wherever it is you live. So when you own a house, again, you are getting potentially tax benefit from it, and you are paying something every single month, right, towards the actual principal loan balance. Now, there is a very specific kind of loan called an interest-only loan where you wouldn't pay anything to principal. Not a typical loan product, but most of the time you're paying something down. Also remind yourself that you're getting something called appreciation. So appreciation means as the house prices go up, right? Then guess what's going to be happening? Your house is going to go up in value, and that is going to become equity for you, right? This is money that even though you don't have it in your pocket, when you go to sell that house at some point in time, you can actually cash out and take that money. The other possibility is let's say down the road, you decide you want to do something called a refinance or a cash out refinance. This means that you're actually going to redo the loan and you're going to pull out some money, or you could do what's called a home equity loan and pull out some money. A couple of different loan products there. You can't do that when you rent. If you want to redo your kitchen, as far as maybe you want to get a whole host of new items for your kitchen, guess what? As a renter, you yourself are paying for that. When it comes to owning your own home, if you've got enough equity and you want to go ahead and you want to take out a loan for that equity, against that equity that you have in that home, guess what? You definitely can do that. So a lot of people, when they ask me, well, which one is cheaper, renting or buying? It honestly depends. Sometimes your mortgage payment and your rental payment will be dang near the same. Sometimes it'll actually be less, right? It just very much depends. The one thing, though, that you can bet on is the fact that the mortgage payment is only going to increase but so much. What do I mean? Well, Jacqueline, what do you mean increase but so much? So the thing that I will tell you is the mortgage payment itself is only going to increase by the raises in like taxes, insurance, stuff like that, okay? Things that usually the mortgage company cannot affect. If you have certain loan products like an ARM loan, adjustable rate mortgage, that's what that stands for, or like an interest only loan product, some things like that, yes, eventually the actual principal and interest part of your mortgage can actually change. But for the most part, most people tend to carry a fixed rate loan product, meaning that the principal and interest is never gonna move. It stays right there, right? If you happen to have PMI or private mortgage insurance, or also sometimes known as MIP, that also is a fixed amount, meaning that's not gonna like adjust like this over the life of the loan. And in fact, at some point, it usually is gonna come off. It's gonna go away. Now, with rent, you're going to be subject to your landlord. So when your lease comes up for renewal, if your landlord wants to raise it, they can. It's within their power. And not every state, there's some states that have some rental controls in place that won't allow them to raise certain amounts or whatever. There's also some kind of rentals that are stipulated by the federal government. For instance, if it's Section 8 housing, they stipulate that there only can be so many raises or changes in that particular amount. As a general rule though, the landlord can raise it whatever you want. So in the area that I live, which is DFW, that is the Dallas-Fort Worth Metroplex in Texas, we actually have seen huge property increases over the course of the last 3 to 5 years. Now, that's great news for the people who own a home because their house prices are going up and up. However, keep in mind that let's say that your landlord, they own that property. Guess what's happening to them? Their property taxes and their property insurance likely is increasing. So do you think that they're just gonna take it on the chin and out of the goodness of their heart, not gonna pass that along to you in rent? Absolutely not. They're gonna go ahead and they're gonna pass that along to you in rent. Well, guess what? Those are the same increases you would have taken as a homeowner. The only difference is that the landlord now cannot raise it just when the property tax and the insurance went up, but they can also raise it to what the market is bearing. So if the market is bearing $400, $500, $600, $1,000 more than what you were paying, yeah, they can go ahead and they can increase that. And that really sucks. I actually had somebody call me about 6 months ago or so, and his apartment rent had been like $900 a month. And he said, my landlord just told me that it's gonna go to $1,400 for a 1-bedroom apartment. This is ridiculous. Can he do that? Can I fight him legally? And I was like, he's totally within his rights. You came out of your lease period. You now are gonna be subject to whatever the market rent is. And honestly, I told him you should be lucky that they're not even gonna raise it more because they could have, because the area that he lives in is crazy desirable. And most of the time, if you were signing up as a brand new tenant in that area, you would be paying like $1,600 a month. So in actuality, yeah, it was a steep bump at $500, but they could have raised it close to $700. Now I know you're thinking, man, that's totally nuts. How in the world can that happen? But the reality is we live in a capitalistic society and things can move as the market does. So you're asking yourself, what do I pick? Honestly, each decision is based on specifically the individual, their lifestyle, what their long-term goals are. But I highly recommend you at least talk to a mortgage professional. The consultation is going to be free. It's not like we're going to charge you. And guess what? We can help you understand exactly what that looks like. I actually had a consultation a couple of months ago with a lady who wanted to look at buying, and we looked at the prices and she was like, I'm just not comfortable in raising what I'm paying that much a month. And I said, that's absolutely perfectly fine. And if you want to stay renting, then, that's great. I gave her the pros and the cons and I let her make the decision. That's exactly what you should be doing. You should be weighing the pros and the cons and deciding what is best for you and your family. Hopefully this video has been helpful. If you will please click the subscribe link, I would love to show you more videos that can help you decide exactly what to do in your home buying process.